Hello, good morning, good afternoon to our listeners. This is day two of the Wibbifit Summit 2024. And of course, we're in the panel session for financial inclusion strategies for bridging the gap. And with me, I have two beautiful ladies here, Dr. Jenny and Miss Ophelia. Just before I introduce my panelists, as we well know, financial inclusion is essential for the economic growth, development, and poverty reduction in the country. Unfortunately, a large part of the population still lack access to finance, with a huge portion of these being female and some of it the rural areas. Looking at EFINA's Access to Finance 2023 survey tells us that we have around 23% of Nigerians who are still financially excluded. And of course, we do know that the CBN has set one of the ambitious goals of ensuring that by 2024, over 95% of the Nigerian adult population have access to financial products and services, and of course, be able to use them. And that is why we're gathered here this morning to discuss the opportunities and challenges in the financial inclusion landscape. And of course, we will be looking at strategies that we can use to level the gap. So please, I will be turning to the ladies to introduce themselves, starting with you, of course, Dr. Jenny. Over to you.
Thank you so much, Salem. So I'm Dr. Jenny, a banker by profession. I'm a corporate trainer. I deal more with SMEs, small and medium-sized businesses, and my focus is more on gender financing and ensuring that women are financially empowered, not just empowered, but financially empowered, so we can contribute well to economic development. I'm the lead consultant of Tarragon Edge, and basically, that is what I do. Thank you.
Thank you, Dr. Jenny. And over to you, Miss Amelia Amaoni.
Hello, everyone. My name is Ophelia Amaoni. I'm the head of growth for Pay Angel. Pay Angel is an international remittance company that enables transfers from the diaspora into African countries. It's a pleasure to be here.
Thank you very much. It's a pleasure to have you both on the panel session. And let's just get right into it. So, I have a question that I would like to ask. So today we know that most of the products and services that are created to address the financial needs of Nigerians usually is made up of those in the executive position. We touched on this a little bit yesterday during the sessions, and in these executive positions, there seems to be a shortage of women in it, and as such, would agree that this product would not really cater to those who really need it, because when you create a product using your own view, using I would say one direction, it doesn't cover all the aspects. What would you say we can do better to be sure that the FI products that we are creating will be able to cover all the necessary segments and not exclude some, so that we can achieve overall inclusivity for both the women, the men, and the rural communities? We can start with you, Dr. Jenny.
Thank you very much, Salem. So I'll say in product development, most times, or what we have seen is that institutions or corporate firms would normally look at what they think the customer needs. But in designing a product, it's important for you to have gone through some, I'll say some research or some feasibility, some product research, where you know that these segments that you are going to provide these products and services to really need them, so that you don't just come up with products that are not going to be profitable, but just are not going to serve the purpose. Let me put it like that. So, for instance, if Genevieve loves to go and develop herself more, then it means that I am more skewed towards educational loans, or I'm more skewed towards a lifestyle loan. So, if you are a financial institution that probably I'm banking with, and your products don't serve my needs, don't serve the purpose to which would make my life comfortable, I don't think that I would enjoy banking with you or if it's savings. So what I would say is that it's very critical for us to always remember that before we come up with a product or service, we need to have done what we call the customer heartbeat. So you need to know what the customer wants so that in providing that product or services, it is going to particularly fit for purpose. So you're not just coming up with products and services like we've seen. That might not necessarily help or serve the purpose of your customer base. Thank you.
Thank you so much, Dr. Jenny, and this is really insightful. So, we'd like to hear from you, Miss Amelia.
Hi. Is it on the same question?
Yes, please. We'd
Okay.
like to get your
Um,
thoughts on the same questions.
I mean, I think Genevieve said it. We have the same or similar backgrounds. You can't develop a product out of the blue. You need to do research. Most of the time, it's easier for the institution to create one product and try to shove it down to everyone. But women are unique. We have different needs. We have unique needs. We have um, yeah, we have unique needs that need to be that need tailor-made products. So one product across board doesn't always work for us. We've seen banks like Access Bank actually dedicate a desk to women. And if you go down, you drill down into what they do, they actually do research. And the products that they come up with that department is really tailor-made for women. I don't work with them, but I know that it's tailor made, and that is at the high level, like you said. But even when we come to the base of the pyramid, it's still the same um, process. There are very unique needs that if we don't analyze and we kind of develop a blanket product to send down to everyone, they will be excluded. Women have unique needs. They need to be educated. They need to have the confidence to actually test the product out. There's statistics that shows that it costs more to onboard a woman than a man, especially at the low levels, because you need to spend more time with them to educate them, to help them overcome their fears and concerns before they get on board. There's the whole digital gap, access to devices, access to the internet. So all those factors come into play. So if we don't take our time to understand their needs, identify the gaps, and design specific products for them, it becomes difficult and they get left out.
Thank you so very much, Ophelia. And I quite agree. We had this discussion where we said that you mentioned it costing more to create financial products for the women, and this is due in part to how most women are, the culture and the sense of worth. Something a speaker said yesterday was right from inception, women and the boy child are being raised to see differently. So it takes a while to re-educate the thought process that these women have grown up with. So that aligns with what you said, that of course one would need to, spend a whole lot of funds to understand and then create products that suits this folk. So I had another question based on your experience and in creating products, working with your product teams, what would you say are, looking at it, what would you say are the biggest barriers to financial inclusion in the community? What is hindering product adoption for these segments? What would you say you've seen as the biggest barriers to FI? We can start with you, Miss Ophelia.
Okay, thank you very much. I would say one of the biggest barriers is societal norms. Just going, and I've worked a lot with the base of the pyramid, just trying to help them to overcome society's expectation of them to try new products, to try new services. There's lack of financial literacy. They don't have a lot of knowledge about financial products and what it can do for them and the benefits to them. So that alone is like one of the biggest things. We spend a lot of time doing financial literacy programs with women, with women's groups, to be able to overcome this. Women tend to congregate more in groups. So once you get the groups and you get the buy-in of the groups, then they relax and overcome all their fears and challenges. I mentioned earlier that there's a device gap. There's a 5% device gap. So they don't have as much access to devices that we use these days to be able to have access to easy banking and easy financial services. So that alone, and even when they have the device, the confidence to use the devices is also another problem. Somebody needs to hold their hand to take them through what to do. They usually use the very basic functions of the phone, just to make calls, receive calls. They don't explore. There's also issues with smartphone access. They may have a phone and it may just be a basic phone that does not have a screen or is not connected to the internet. So that also limits what they can do. But I always say that is what has made mobile money successful, because with mobile money, you don't need a smartphone to bank, especially if we use the M-Pesa and the MTN mobile money examples in Ghana. All you need is a phone that can make a call, dial your short code, and you have access to banking. So most of the time when I see products that are internet based, I say you're cutting off a lot of people because the masses don't have access to smartphones. They have limited access to internet. And the cost of internet is also sometimes a deterrent. But if they can just dial a short code, which will not cost them anything, they are online and they're able to access these financial services. So there are cultural norms, there's device gap, there's internet, there's lack of financial literacy. There's also even digital literacy issues that we have to deal with. And these are all barriers that affect access to financial services.
Wow, thank you, Ophelia. I mean, these are a lot, and key among them, if I hear you, really has to do with the technology gap. And it's making me want to ask a question, Dr. Jenny. Based off these barriers we're seeing, which I feel like leveraging technology could solve a whole lot of it. My question would then be how can we leverage technology to then solve most of these challenges as well as expand access to financial services?
Thank you very much. I think earlier on in my keynote, I made mention of the fact that we've come far because now we can see a lot happening because of fintech. Now you can have access to finance through M-Pesa, through Momo. There is some credits available to you once you have any kind of phone, like Ophelia said. You don't need a web technology to be able to have access to Momo or the short code to be able to access finance. But what I would want to really speak more on is the fact that we should be able to design very simplified products. You don't need so much in terms of supporting a business person or in supporting a woman in business. Sometimes they need as little as $100. They need as little as $200, less than $500, and it will go a long way. But how are we able to use technology so that these women, today we are talking solely on women, so these women get to understand that I can trust the device. We all know the issues with fraud that has to do with technology. So a lot of people don't have the trust to even engage in these platforms. So like Ophelia said, we need to do a lot more in terms of education. We need to let them build that confidence and know that it is doable. Yes, risk would always be associated to something, but we can always find a way of mitigating these risks. So in terms of using technology, let's design very simple ways. Let's have, I think today we have an investor, somebody has the money, somebody has the need. So we have a way of using technology to have a crowdfunding platform. That is basically what I want to put across. So we have a crowdfunding platform where some countries have not fully accepted it. But these are platforms that would help greatly in terms of leveraging on technology to access financing. So I have an idea. I don't have the money. Salem has the money. So Ophelia is the middle person who has provided us that technology where the two of us can come together
Together.
and have a similar platform to engage, to do business. So I think as institutions, what we should actually look at doing is to come up with very simplified ways of getting these two parties. So the one who has the money, that's the lender, and then the one who wants the credit. So we end up getting investors and people who want access to these monies on one platform so that together we can bridge the gap as we want to. Thank you.
Thank you so very much, Dr. Jenny. Ophelia, do you want to add something to this? Hi,
I think
Ophelia.
Dr. Jenny has said it all. One thing that I know is that once these products are really designed to fit the needs of women, they take off with it and they become the best customers that you can have. So we also have a lot of research that shows that women are better savers. We also know that they're better borrowers, you know. And so these are just two simple examples to show that if we get it right, the financial institutions stand to gain a lot because financial institutions thrive on deposits. And if I may add, cheap deposits, right? So if women are better savers and you design these products and you're able to educate them and get them on board, you're going to grow your deposit base, be able to have very low cost funds in your pool that you can use to generate more revenue. And it's the same for credit. When it comes to credit, women are better borrowers. They pay back on time. They have a lower default rate. So if we're tailoring these products rightly, even though the cost to acquire may be high, the benefits that come with getting it right goes a long way for the institutions that really invest in women.
Thank you. Thank you so much. And I also think, aside the fintechs who are really doing great, I must say there are a whole lot of fintechs who are creating impact in trying to bridge this gap. I feel that there's also a lot that regulators can do. I think it's not enough to leave the bulk of the work to the fintechs. The regulators, the government also need to come into play to create fair policies that can also enable them do the work. So my question would be to both of you, of course, what regulatory changes you think are needed to create a level playing field?
To start with, I'll say I think I chanced on a document. The regulator, the Bank of Ghana, I don't remember what year, but I chanced on a document where the government, I mean, definitely through the government, the regulator has been able to come up with specific strategies. So being very deliberate on ICT, making sure that a lot of education is going on. That is one strategy. Also, in terms of ensuring that there is some level of competitive rates when it comes to the industry and borrowing. And then I think with regards to capacity building, they've ensured that a lot more institutions are focusing on capacity building, trying to echo it more. My own former bank, Fidelity Bank, I think is doing great in terms of trying to sensitize the youth a lot. So there is a lot going on in terms of empowering the youth, empowering small businesses. And this can only be done because the regulator has approved, the regulator has endorsed that these are ways that we need to leverage on to be able to bridge the gap. I think one other thing that I also saw was the fact that in terms of legislative orders, there has been others that are ensuring that women are secured in terms of going into business contracts. Women are able to come up with, or there are legislative rights that I'll say supports the woman. So if you are going into any business with someone, there should definitely be some level of business contract, if nothing at all, an MOU that safeguards the woman from losing a lot of money, because we've seen a lot of women go into the traditional way of formally going into or informally going into business contracts, and at the end of the day being being abused or being being cheated, let me use that word, because they don't have what it takes, they cannot fight, they don't have any rights. But now I think the government of Ghana, through Bank of Ghana, has come up with quite a lot in terms of legislation, in terms of ICT development in a lot of rural communities, as well as building capacity in women-led businesses, and also encouraging a lot more banks to focus more on women led businesses and as well as the youth. So I think from our part, I think these are a few of the things that the government through the Bank of Ghana has done. Thank you.
Thank you, Dr. Jenny. Over to you, Ophelia.
Thank you, Salon. I think in Ghana, one of the initiatives that kickstarted the focus on women was the National Financial Inclusion Strategy. It made specific mention about zooming in on women because they are traditionally left out of financial services. So that was one, at least from the policy perspective, realizing that the regulator actually has women in focus, serves as a guide to the institutions that report under the regulator. The second thing is to ensure that we are measuring what is going on in terms of ensuring that we collect sex disaggregated data. And I say this because for a long time, institutions were not focused on, and I can speak some institutions that I know of, were not focused on segmenting their data to find out even how many men account holders versus women they had. And I remember the units that I also used to work with in my past life. The first time we did that analysis, we were shocked to realize we had more male customers than female customers. And we cracked this joke that okay, maybe it's because a lot of the sales team members were women, so they were able to appeal to the men. But that was a
Convince
side
them.
joke, right? But if we don't, the policies come and they need to be implemented. And after they're implemented, we need to measure to see what the outcomes are. So in measuring, that's when we're able to identify that no, there's this huge gap. How can your portfolio be made up of maybe 70% men and 30% women? That will trigger you to start asking questions, to start identifying where they are and start marketing to them to bring them on board. So this data that I'm talking about triggered a specific product that we designed for women because we realized that there were more women SMEs than men. So we had to develop a very affordable SME product for women to increase the number because that's what they needed. They needed small loans and they needed access to finance. So the regulator is key. They really, if there's no focus or direction from regulator, it's very hard for people to for institutions to really comply with it. There also has to be a channel for recourse. So when people are treated unfairly or they feel like there's unfair pricing or anything untoward happening, they should have a way of registering their concerns all the way up to the regulator, not at the institution level, because some institutions will suppress whatever issues you're bringing. But at the regulatory level, there needs to be a way that people know that if I have a challenge, I can call this number and the institution in book. Because let's not forget that some products and services have also not benefited women properly. So just to summarize, regulatory frameworks, policies are very important. They guide the direction of the country. They guide the direction of what the institutions can achieve, but it needs to be implemented properly and it needs to be measured.
Thank you. I quite agree, and I remember here in Nigeria, one thing that the Nigerian regulator, the CBN, did to drive adoption of FI usage of FI products was introducing a general dispute resolution mechanism that cuts across all but for fintechs, banks, because there was this distrust of customers making use of the alternate financial usage for access points because they felt like their disputes were not being resolved satisfactorily. But I remember that when CBN and SANEF came up to put together an industry-wide dispute resolution process that really structured it and ensured that the customer would get their disputes resolved irrespective of if the FI, the fintech or bank in question was being delayed. There were due mechanisms to solve all of that. We witnessed a boost in customer trust in using the FI services. So I quite agree with what you say that regulators do have a lot to play. I even remember bringing in, there's been a lot of initiatives in the Nigerian financial landscape, BVN, just to increase the customer's trust in using the financial services. But then that's one thing, you can look at all of this, you can do your research, you can then create products, but sometimes you find out that adoption still fails. So you've gone into those rural areas, you've looked at it, and you've put together a team, and you've come up with a product that we feel like will solve the problem, but it still fails. There's no adoption for some reason. What would you say in your experiences one can use in bridging that gap of adoption, especially for the rural parts and for women? How can we get them to adopt this, make them see the benefits of using these products and services for them? Dr. Jenny, you can please take the lead. And then,
All right, thank you. So let's put it in perspective. So for instance, if you design a product that takes care of very small loans, I'll say micro loans, right? Where you know
yes,
that, okay, this product is actually to support homemakers or to support small businesses. So like 1,000, I'm in Ghana, so let me use 1,000 Ghana cedis up to 5,000.
okay,
Most times the fear for women is that as I'm going to take this loan, in the event where I'm unable to pay, what do I have to give? Because they've heard a lot of stories. So there is some prejudice that if you don't pay your loan, this will happen to you. Your house will be taken. So, so all those kind of things have gone on. So the first thing we need to do is to ensure that before we even come up with a loan, like we've all said already, there should be
yes,
that stakeholder engagement. You're designing a product for me. If you are customer centric, it means that you would have some level of focus group discussions. What is my need? That is why I spoke about the customer heartbeat. What do I need as a customer? Once you are able to have that stakeholder engagement and you know that this is my need, I need 5,000 to be able to move from this base to the next. And you design a product that is not cumbersome, that is not so high in terms of weight, that is not so difficult to access. But I know that, okay, from end to end, it's been covered. Then adoption becomes easier. But if you don't design a product with me or my need in mind, and
in
you
mind,
think that I need it, so you're assuming that I would need this product, so you designed it, and you say I should come for 10,000. Meanwhile, I just need 5,000 or I need 3,000. So that fear of thinking that if I'm unable to pay, something of mine has to give would not allow me to adopt. That is the first thing. The
yes,
second thing is, in the event where you realize that a lot of products have been designed, but implementing them have been a problem. So we've all heard of different products across institutions that have been advertised upon and all that, but now you go and assessing it is a challenge. So it doesn't even encourage people, and remember, there is word of mouth. So once the word of mouth goes that, oh, I went here and I didn't get it, I would not want to even align. So adoption then becomes a problem. And then the third thing I'll speak about is what Ophelia earlier on mentioned. If we are able to identify the problem, let's assume that we've done our focus group discussions, we know the customer had, we know what the customer needs, and we've designed a product to fit. We've given it out. The rates are good. They've assessed. If we don't monitor and
mm,
ensure that there is that strategic partnership for the customer to feel that I have not just been given money so that whether it goes good or bad, I'm on my own. But we add the bit of support, the bit of monitoring, call visits, ensuring that we are closely knitted with our customers. Then adoption becomes easier. So once I have adopted an end to end, I see that you are ensuring that my business is going well. You're paying me some visits, you're calling me to check up on my business. And I know that at the end of the day, if I don't do well, you know the reasons why I did not do well. And if I do well, you know the reasons. Then it makes it easier for every other person to adopt. And then the adoption rate or adopting to products that we bring out there increases. That is how I would answer this question. Thank you.
Thank you so very much. What I
You're
hear
welcome.
from you are key, and I've been able to jot a few things down. What I hear first is fear of mine from the end of the customer. Then I hear ease of access. How easy is it for those customers to access your products? And I'm also hearing monitoring and evaluation, which I think is very key because, like you rightly said, it's not enough to release a product into the market and just drive awareness for the first few weeks and leave. Monitoring and evaluation will help us know the adoption rate and know what we need to go back and fix to make it better, take feedback, and of course, continued support. Thank you, Dr. Jenny. Ophelia, do you have anything to add?
I think it's difficult to add when Genevieve has said all these wonderful points, but
Thank you.
I think one thing about pricing is also very important, to ensure that these financial products are affordable, because a lot of women, especially those that we want to financially include, are very sensitive to charges. So I remember we had a product that had a 1 CD per month monthly fee, and then we just saw usage go down. So we just quickly went to market 1 CD. I don't even know what to convert it to now, just 1 CD. And usage
Wow.
went down. So we went out to ask what is going on. And the message was very simple and clear. If I put, we advertise the product as a low KYC product, and you could open even a zero balance account. You could even deposit 1 CD in um, at a time. You could either do 1 CD a day or 1 CD a week, because we just wanted to start them very low for them to adapt. But once we started charging 1 CD, they started, they stopped, or they started reducing the amount of money they were bringing in. So when we went to find out, the logic was very simple. To them, if they have 1 CD in their account and we take 1 CD, it goes to
They
zero.
are
They
zero.
have nothing. Okay. So it's scary to them, because to them, what they want is, if I put 10 CDs or 1 CD in the account and I come 1 year later, I should have my 1 CD and perhaps
Nothing at
interest,
all. Yeah.
but I don't
Yes.
want to see that money disappear from my account. So that
Uh-huh.
is one thing that sometimes we don't pay attention to. What we also realized is that they were okay with paying at the point of withdrawing, just like mobile money, right? So in mobile money, there's no monthly fee. You keep your money in and it's in there. But at the point of withdrawal, you are charged, and they are okay with that. So we realized that they are sensitive to charges, and we needed to understand that. We quickly changed the charge. It was a very difficult conversation, because we were a business unit and we're supposed to bring in revenue. Now, how do you go to your superiors to say that, look, our deposits are falling because we are charging 1 CD per month? It was a very difficult. I remember, and my boss was like, "Are you sure? How are we going to make this money back?" So what we did was we had to segment. That's another thing. We had to segment our clients. We had those that were at the base of the pyramid. So we tagged them as saving clients. And so these saving clients were not charged anything monthly. Then we had the current clients, the current customers. They had we sold Visa cards to them and SMS banking. So what happened was that they understood that those services came with charges. So it was more like, if you want a free account, get the savings option. If you want electronic products, you're gonna take this, and we will charge you maybe 2 CDs for that. And I think that worked. So segmentation is important. We need to identify who we're dealing with. We need to understand how they react to charges, changes, and all those things, and then adapt quickly. Because if you don't adapt quickly to, and you have to analyze your data. That's one of the interesting things that you need to do as an institution. If you don't analyze the data regularly, you won't see the trends, you won't see what's happening, you won't be able to pick up issues that are affecting your business. So once you analyze your data and you see any trends, you may see that a particular community or a particular part of the country is giving you more money than the others. You need to find out what is
Right.
ticking the box for them there. And then when you have low adoption, you need to also dig into the data to find out. And if you have to go to the field, you go to the field to find out why usage is low and what you can do to bring it up. Thanks.
Thank you so very much. The data analysis part you spoke about can really not be overemphasized. I mean, whenever I step into a session to consult for strategy, I know that the first thing I ask for is their data load, and they're always surprised as to why I'm asking for data. But I'm like, you need data to be able to observe trends. Without observing trends, you cannot tell your strengths, your weaknesses, or how to innovate forward. So data analysis really cannot be overemphasized. And I do feel that sometimes it is something that is overlooked. And that is why we are somehow stuck at where we are. So thank you so much for bringing that to the fore. Data analysis, adaptability, like you said, you've observed the trends, you've pinpointed your strengths and weaknesses. How fast are you to adapt and catch up and rectify what needs to be rectified? Segmentation, you spoke about segmentation, know your customers, segment them, and the example you gave was really practical in that you were able to bring up multiple options to suit both segments, those who wanted the interest and those who preferred the charges for whenever they withdraw, and it was a win-win. So that's a really practical example. And you also spoke about affordability. Of course, it's not enough to bring out a product and assume like you said the one CD. It's really easy to assume that anybody would be able to afford that. Unfortunately, that was not the case. So, affordability is also key. I mean, this is a whole lot that we've been able to take, and I know we are pressed for time, so I'm just going to throw one last question and we will wrap it up. And the question is, with all that we've said, we have looked at the challenges, and you've both been able to share from your worth of experiences um, some initiatives that could tackle these challenges that we have identified. We'll look at the barriers, the social constraints, the technological barriers, and things like that. How would you sum it up in looking at this gap, these opportunities, these challenges we've seen? What strategies will you both leave us with to then bridge this gap? If you would say something, if you would list some strategies, what strategies will you leave us with that you think will bridge the gap of financial inclusion? We'll start with you, Ophelia.
Okay, thank you. There's a lot that we can do, and I think we've said it from start to finish that you need to start with research, identify what the gaps are, and then tailor make products that will serve the needs of these customers. um, if you analyze, even if you don't do a lot of research yourself, we know what the challenges are, we know what the barriers are. You need to go to the and usually we say low tech, high reach, right? That's the whole thing. The technology has to be very simple for everyone to be able to get onto it. It's the example I gave that if your solution is deployed on a smartphone, you're immediately cutting off a lot of people. Jennifer will bear witness. Even the financial institution that we both worked with, we had to go to that level of enabling just what we call USSD banking, because with our mobile app and things like that, it wasn't working. So you have to make it low tech if you're using technology to be able to get more people on board. It needs to be affordable, it needs to be easy to use. But you cannot do all of this if you don't add a level of financial literacy to it. Trust me, A lot of things happened, especially even in Ghana, that broke the trust, confidence of a lot of people. So we still have people saying, "Hey, I know somebody whose money has got lost because they opened a bank account." If we don't go to the level of explaining to them that, look, we we are offering you something that is safe, your money will not get lost, we lose the plot because there are people who are holding back. I give an example of a domestic staff that I hired, and every domestic staff I hire automatically gets a bank account because I'm going to be paying you through your bank account. Guess what? This guy said no. Why? Because he had lost money saving in a bank. And I felt like I had failed because my job at the time was financial literacy, account opening for base of the pyramid, and my own domestic staff declined. Till today, he doesn't have the bank account. I had to resort to using mobile money. So we have to be very intentional. If you are not able to break the mindset, crack into the space to get them to open up, you can have the technology, you can have everything, but it will not be used. It will not be used because of something that they have experienced. And sometimes it takes a lot of time, it takes a lot of money. But like I keep saying, if you look at the numbers, there's a lot of mobile money customers more than the number of bank customers, and there's a
Thank you.
reason for that, and it's profitable. So what I'll say is that make it low tech, make it affordable, and get a lot more people on board. If you have 1 million customers and they all have 10 CDs, that's worth more than having like 100,000 customers who cannot give you the same deposit that the mass market would give you. Thank you.
Thank you so very much, Ophelia. Over to you, Dr. Jenny.
Thank you so much. So, just to add up, I'll say that let's use the collaborative approach. What do I mean by that? Let's remember that it is not one man's job. We require all stakeholders to come on board. Let's be able to get closer to our customers. Let's be customer centric enough. Let's approach bridging the gap with customer centricity, where we get to give credits and build capacity. And the last point I would make is that let's design a lot more products. Like I shared, the Edge Credit Union, where I am a business consultant, the focus is to be able to get more women to be banked. And how do this? We can only do this by getting closer to them. Women love the communal system. So by getting close to networks that women belong and making them aware that you belong here, making them aware that we have your interest at heart, making them aware that it is very, very trustworthy to bank or to save your money in a financial institution. And also to make them aware that it is competitively cheaper to have access to funds when you have saved and your money can be used as a cash collateral to give you back money. So with all these strategies, I think we can get far with bridging the gap. Thank you so much.
Thank you so much, Dr. Jenny. Thank you so much, Ophelia. This has really been an insightful session. I've learned a lot, and I'm sure the audience has as well. And we've covered so much from the barriers to the thought process to how to come up with inclusive designs. And of course, the winning strategies that you've all shared, which I will just recap so that it stays in our mind as we go off. So, for us to be able to bridge the gap of financial inclusion, as both of our panelists have shared with us, we really need to have focused research. We want to then come up with tailor-made products, and of course, like Ophelia said, which is key, simple tech. Simple tech cannot be overemphasized. And of course, we want to look at affordability. Dr. Jenny told us that the collaborative approach is needed. It takes all the community to do the work and not just one. So from regulators to the government to the fintechs to the banks, we all need to have a handshake to be able to bridge the gap of financial inclusion. And of course, customer centricity is needed. You need to build something that your customers will use. So you therefore need your customers to trust in you so they will use your product. And you can only do this by designing focused products. Only then can you foster trust. So we're going to end the session by saying thank you so very much, Dr.
Thank you
Jenny.
too.
Thank you so much, Ophelia. It was an honor to have you both on this session, and we look forward to having you on other sessions and our podcast. Thank you so very much.
And thank you so
Thank,
much, Salem, for the great work done. Thank you,
thank
Ophelia,
you.
for the great
Thank
insights.
you.
I've learned a lot.
Have a great
And
day.
thank you to Financial Inclusion for the opportunity to share knowledge.
Thank you. Over to you,
Thank you
Obi.
too.
Hello, everybody. Can you all hear
Hi.
me? Oh, okay.
Yes, we
Thank
can.
you. Thank you so much. That's been a very exciting and impactful session. Thank you, Ophelia. Thank you, Dr. Jenny. Thank you, Salem Ashta. It's been a wonderful time. Thank you for your time. It's well appreciated. Um, See you
Thank you
again
for
next
having
time.
me.
Thank you for having us.
Yeah. It's still Wibbifit 2024. Hold on for the next session in a few minutes. Thank you.
Thank you